So welcome back to the Astro FX Fundamentals series. In this one, lesson 3, we're going to look at what data is important for what currency and also the correlations for the currencies, what to look out for each one. So first of all is commodities currencies, and we have Canadian dollar, so CAD. That's basically works on oil. If oil prices are moving higher, Canadian dollar will move higher, vice versa. If they move lower, Canadian dollar will move lower. Now this is because they produce a lot of oil in Canada, but it makes up around 7 to 11% of Canadian GDP, so it's quite an important part of the Canadian economy. So if oil is not performing very well and oil companies aren't performing very well, you might see some issues for the Canadian dollar. The same thing in Australia, but for base metals. So for the Aussie dollar, if copper and iron ore are moving higher, often the Aussie dollar moves higher with them. So purely because if they'll make more sales of it at a higher rate. Now this one's interesting. Not a lot of people know this, but for New Zealand, so Kiwi dollar, milk and meat are two big commodities there. There's a lot of cattle in New Zealand. There's actually more sheep than there are people. So in terms of meat sales, they sell a lot of meat to China because it's a growing economy, and also to India as well. But milk comes out of basically powdered form and also raw form as well, and this is used for basically babies when they feed them, things like that. So it's powdered milk, and it has a big part to play on the Kiwi dollar. Manufacturing data. So this makes manufacturing data important in these economies because they're manufacturing nations. They produce a lot of stuff. So manufacturing PMI from Canada and Australia is important for their currencies, but also adding to this, Chinese manufacturing data is very, very important for Australia because obviously they're the largest consumer of base metals. They actually consume 50% of all global base metals. So if Chinese manufacturing data is good, then Aussie dollar will rise. So basically, which countries buy the stuff? So then in Canada, it's the same thing can be said with the US. So if the US is performing well, they might buy a lot of oil from Canada, and we could see a bit of flow between dollar CAD. So that's why we could see that movement in dollar CAD, because purely because they need more commodities from Canada. So what to look out for? So the numbers are the manufacturing PMI. You need industrial production data. They're the two biggest things for these currencies, and also just in general how those commodities are performing. Safe haven currencies. So why is the Japanese yen a safe haven currency? And it's purely because in Japan, I don't know if you've ever been there or not, other than Tokyo, the rest of Japan, they're kind of like a saving nation. The people are taught to be responsible with their money, and they save a lot of their money. Now, why it's a risk currency is because if they do invest their money, as soon as anything happens, all of that risk is clawed back and the yen will rise very, very quickly. And we see that in dollar yen. If the stock markets have any trouble, then dollar yen will fall. And that's the way to think about it. Same thing with the Swiss franc, but Swiss have a bit of a different reason for being a safe haven. Now, all illicit proceeds, or you can't extradite any money that you've left in Switzerland. So that's why it became a safe haven. People used to hide and hoard money in Switzerland purely because it couldn't be extradited at any stage. Their trusts are set up differently. Their government sets up their money monetary policy system in terms of safety a bit differently. And it's still the case today. So if you ever want to hide any money, put it in Switzerland. Why is the dollar a safe haven currency at the moment? And it's just purely because it's the global reserve currency. There's a big protectionist trade from Trump, who's basically fighting everybody else in terms of trade wars and stuff like that. So the dollar is the safest place to have your money because you can buy a lot of commodities in dollar, as we discussed previously, but also the fact that a lot of the major companies and a lot of the strength is coming from the States. Risk flow. So if stock markets fall, or if there are bad investments, or there are massive political problems, you always look at where the risk flow is going. Is it going into yen? Is it going into Swiss franc? Or is it going into gold? So there are other options here, but they're the main things to watch out for. So how to look on at risk on and risk off. So every single day we look at the risk situation in the market from the previous session. So how's the risk environment gone in Asia before we start in the EU? How's the risk environment in the EU before we start in the US, and so on and so forth? Is money going into stocks or is it going into safe havens? That's how you use safe haven currencies to trade off of and to watch out for. And like we said, that's why the daily news is so important. If nothing's going well and everybody's struggling, you buy yen, you buy Swiss francs. UK is in a league of its own at the moment. So you see this little picture here with the Brexit situation going on. Services PMI is normally the biggest data point for the UK because 30% of the country's GDP come through services, and that majority of that is banking services and IT services, things like that. Politics now has overtaken this because we're coming up to a general election and obviously Brexit. But manufacturing PMI is also important in the UK because we do produce cars and things like that here, but it's nowhere near as important as services PMI. We're the world financial centre because we're in the middle time zone. A lot of people speak different languages in London, so that's why we kind of keep an eye on that. If the banking sector is going well, then the UK is going well. Brexit has thrown a spanner in the works, to be honest. It's taking away a lot of the traditional correlations. Now that's the key focus. You want to keep all your cards on Brexit headlines basically, and Boris Johnson is saying that he's going to leave with a deal and he's pushing that. Corbyn saying he's going to put out another referendum. We obviously have to wait and see what happens from this point, but it's not the same as any other country right now. We have very, very different problems. The US is the world's reserve currency, and all commodities are priced in US dollars. Now, it has a negative correlation with gold, so if the dollar moves up, gold moves down, vice versa. There are a couple of instances where they can move in tandem together, but we won't go into that now. But that's generally because the US dollar used to be backed by gold, and then they got rid of that correlation between how much gold reserves that the country has to have, and now it's just purely an inverse correlation. Politics in the States is also interesting at the moment. We've got Donald Trump in charge. The Democrats are trying to throw him out, so we're looking to see whether he's impeached. But also, he puts a lot of pressure on Jerome Powell, as we discussed in the interest rates lesson. And it's a tricky situation. He has a lot of power over the markets. He's very pro-business, so that's very pro-US dollar. But he doesn't want the dollar to keep rising because that makes imports more expensive for Americans. Exports rather more expensive for Americans. So when they sell their goods to other nations, they're obviously way more expensive, and that's where the dollar has a big problem at the moment. Now I've thrown this in. It's a very interesting point. Is how do empires end? We're obviously in the middle of a US empire or towards the end of a US empire, but normally it goes down with the currency. If the currency goes down and collapses, kind of thing, or another currency becomes the world's reserve currency, that's normally when you'll see the end of an empire. So there's just a little bit of a clue there. I don't want to go into conspiracy theories. Donald Trump, we've discussed him a little bit, but he is a key driving force of the dollar. Like we've mentioned, pro-business. He's not too happy with Powell, but everything he says, every tweet that he has, we have to take note of and watch how it impacts the markets. The Federal Reserve, so they've pumped a lot of liquidity into the markets via quantitative easing, so QE, and this was to try and devalue the dollar. They ended that cycle and they're just kind of starting it up again now, but their key point at the moment is, are they going to raise interest rates? Are they going to cut interest rates? They've cut interest rates recently. They've said that they're going to pause now to basically see how that plans out and what happens from here, but they're under a lot of pressure to keep cutting from Donald Trump. So what to look for from each currency? So if you're trading dollar yen, you're trading risk. If the stock markets are going up, dollar yen's going up. If the stock markets are going down, dollar yen's going down. So any risk event that's negative, you will buy yen and dollar yen will go down. So if you're trading CAD yen, then you're trading oil versus risk. So what we mean by this is if oil's going higher, but let's say, for example, stock markets are going higher, then CAD yen will go higher. So you're basically looking at where commodities are versus risk. This is an interesting one. So if you're trading sterling versus Australian dollar, you're trading UK politics versus base metals. So if UK politics is doing well and Boris Johnson might get in charge, that's perceived to be doing well. Whether you think that or not is your problem. And then base metals are falling, then you'll see Aussie sterling. You'll see this transaction. So GBP Oz will go right up based on that. But that's just at the moment. I've put that in brackets because of Brexit and the general election. Once that's finished, we should go back to normal. So key thing here is make sure you know what each central bank is looking out for, what data points that they're keeping an eye on. The Fed have clearly said that they're watching inflation numbers. So you watch inflation numbers in the US. In the UK, the central bank, Bank of England, Mark Carney, he said that he's watching out for the general election announcements and for Brexit. So we're watching that for the pound. It's as simple as that. Keep up with political developments, so you've always got to know what's going on politically in each nation. I'll give you a throwaway example of this that's just happened is in Canada. So Justin Trudeau was elected again, but leading up to his election, there was a lot of issues and a lot of people didn't think he would be re-elected. So that was being reflected in the Canadian dollar. And as and more negative stories were coming out, the Canadian dollar was being affected more negatively, and now things have changed politically. The currency stabilized on the political side, but it's changed a lot on the Bank of Canada side because they've turned more dovish recently. So that's the key correlations. You've got everything you need to look out for to know which currency is affected by what piece of data and what news and what commodity and things like that. So the key things there are commodities. Which commodities rise, that will push up Canadian dollar and Australian dollar. Then you've got risk for Swiss franc and for yen, and then for the pound and the US dollar, you know what's moving those as well. So they're the key currencies and they're the key things. Now you have to basically watch these developments every day and see how these developments move the currency to know which ones are important and which ones aren't. So always keep an eye on that. It's very, very important. And we've got one more lesson left of this series, and that's how to develop a plan. So we've discussed interest rates, we've discussed technicals versus fundamentals, we've discussed inflation and GDP, and we've just looked at correlations. Now we want to know how to put that all together for the next session.